Chancellor Rachel Reeves, as she delivers her spring statement, will speak of boosting UK's defence spend by £2.2 billion next year, adding that economic plans have been blown off course by a changing world. The extra funding will come from new cuts to overseas aid budget and the Treasury Reserve as UK defence spend moves up to 2.36% of GDP in the financial year 2025 to 2026. Hello, welcome to Global Business Insights, where we analyze the main business stories. UK Chancellor Rachel Reeves delivers her spring statement today as combination of the national insurance increase, a freeze on income tax thresholds, and a rise in stamp duty all come into force from next week. Others are trading the pound cautiously as they brace for growth downgrades and spending cuts. The UK spending watchdog is expected to present forecasts showing growth for this year has been downgraded from 2% to about 1%. This is not a budget but an update on how the finances of the United Kingdom may have been impacted by changing internal and external context and what the government is doing about it. The Office for Budget Responsibility is the independent public finances watchdog which produces the official forecasts for the economy and public finances used by the Chancellor. It produces two forecasts each year, judging whether the Chancellor is on course to meet their public finance targets. The Chancellor responds in her spring statement, plus announcements on spending and possibly tax changes to ensure fiscal rules are met, and there could be signals on what to expect in the autumn budget. First, it was coping with Brexit, now looking like a mild cold compared to what came after. There was COVID, and then the Russia-Ukraine conflict, and now threats of higher tariffs and the uncertainty driven by a new US administration, also demanding Europe spending more to defend its shores. On top of that is a sticky inflation that implies higher borrowing costs for longer, and then growth that seems to defy all efforts at revival. Already, the Chancellor has ruled out further tax rises and welfare cuts to save £5 billion per year by 2030 were announced last week, which includes stricter tests for personal independence payments and a freeze on incapacity benefits. She has also pledged to reduce government running costs by 15% by the end of the decade, and about 10,000 civil servants are expected to lose their jobs. In response to a changed world, more has to be spent on defense, which may mean less available for aid. And if there is no return to spending austerity as she promises, then where does the money come from? The OBR may comment on the fiscal rules on how or if the government is adhering to them. These include not borrowing to fund day-to-day public spending and to get government debt falling as a percentage of national income by the end of this parliament. She had said these were non-negotiable. The rules may be rigidly non-negotiable, but her position as Chancellor may be much more fragile, as some analysts suspect this, if it doesn't go well, may very well be her last statement. On the brighter side, some sort of economic deal with the US is imminent, and talks over the Brexit reset are also progressing. There are also signs of the economy doing better, especially in the services sector. So while this is not a budget, it does allow many questions to be answered and could also be an opportunity to project a more positive future, that is, have a positive spin around all these difficult issues. Analysts are also concluding that it could also be an opportunity to set the stage for a broader rethink of fiscal policy in autumn, also buying time to sell perhaps the more dramatic changes that could still be coming. So this becomes more like a kicking the can further down the road event. We also just got UK inflation, that's consumer price index, in this morning. The United Kingdom Consumer Price Index cooled to 2.8% year over year in February after January's 3.0%. Though less than 2.9% expected, the reading was still well above the Bank of England's 2% target. February month-on-month inflation at 0.4%, also less than forecast. The data comes ahead of the Chancellor's spring statement in the House of Commons at 12:30 GMT. Although today's figures show inflation in the UK lower in the 12 months to February, critics are still insisting that the choices of the Labour government have saddled the country with higher inflation for longer, adding that the data is no comfort to the millions of families across the country who are still struggling as prices continue to rise. Traders are also boosting bets on a Bank of England rate cut at the next May policy meeting after today's inflation data. As trade talks between India and the US begins, it has been reported that India is willing to reduce tariffs on most American imports during the initial stage of a trade agreement under negotiation between the two countries. This reduction aims to prevent retaliatory reciprocal tariffs that could come next month. New Delhi has seen reciprocal tariffs hitting potentially 87% of its total exports to the United States, worth $66 billion, and is open to reducing tariffs on over half of US goods it imports, valued at $23 billion, that are now subject to tariffs ranging from 5% to 30%. India has been the fastest growing major economy in the world for the last 10 years, with the latest data from the IMF showing a staggering 105% growth in the last decade. Indeed, India has the most protected domestic market with a vast array of tariff and non-tariff barriers. According to World Trade Organization data, the US trade-weighted average tariff stands at 2.2%, while India's is 12%. The United States also buys $45.6 billion worth of goods more than it sells to India. Just to get the picture, for agriculture, meat and processed food, the US exports $1.94 billion worth of goods and is charged a weighted average of 37.66%, while India exports $6.04 billion worth of goods and the US tariff is 5.29% on average. The possibility of pushing for reciprocal tariffs leading to lower tariffs cannot be ruled out, but it's still too early to say what is likely to emerge in April. The expectation is to see a staging of reciprocal tariffs aimed at encouraging negotiations of the sort we are seeing between the US and India. Now for some more business stories. It's not only India trying to stave off high reciprocal tariff actions. The European Union's Trade Commissioner Maros Sefcovic met with US top trade officials yesterday to try to avoid steep US tariffs on EU goods next week. But results, though said to be substantive, provide very little details on any progress on objectives of the discussions. Software maker SAP became Europe's most valuable company this week, riding a wave of artificial intelligence enthusiasm and the German stock market gains. The company had a market capitalization of around $342.4 billion by Monday close, with shares up 1.16%, also on Monday up more than 40% over the last year. The S&P 500 yesterday notched a 3-day winning streak for the first time since early February, helped by big tech stocks, but focus is still on the uncertainty as it seems reciprocal tariffs will be executed in stages, and also as other data like the Consumer Confidence Index is souring sentiment. In March, the U.S. Consumer Sentiment Index extended its decline as the Conference Board's consumer confidence measure fell from 98.3 to 92.9, also its weakest reading since February 2021. The present situation index also declined by 3.6 points to 134.5, while the expectations index, which gauges short-term outlook for income, business, and employment, tumbled 9.6 points to 65.2, the lowest level in the last 12 years, and below the 80 threshold, which is usually associated with an incoming recession. Moody's also warned on the U.S. fiscal outlook, saying higher trade tariffs could hamper ability to cope with a growing debt pile and higher interest rates. Nigeria's Trans-Niger oil pipeline has been fully restored and is working normally after it was ruptured by a blast last week. The Trans-Niger pipeline, with a capacity of around 450,000 barrels per day, is one of two conduits that exports bonylite crude from Nigeria. Kenya Airways said on Tuesday that it had made a pre-tax profit last year after more than a decade of losses helped by foreign exchange gains. One of Africa's biggest airlines announced pre-tax profit of 5.53 billion shillings, that's $42.8 million in 2024, compared with the loss of 22.86 billion shillings the year before. The airline has been in the red since 2013. South Africa's consumer confidence plummeted to a two-year low in the first quarter of 2025, also one of the steepest declines in recent history. The consumer confidence index plunged to minus 20 index points from minus 6 in the preceding 3 months, according to the FNB Bureau for Economic Research data. Households, according to the survey, are increasingly concerned about the local economy and threat of higher taxes and the discord among partners in the government of national unity over the rejected proposal to hike VAT by 2 percentage points. In a letter from several prominent members of the European Parliament involved in artificial intelligence regulation, architects of the landmark AI Act have urged Brussels to halt dangerous moves to water down the rules regulating the development of AI. The European Commission is said to be considering making parts of the law voluntary rather than compulsory. The US has added 6 subsidiaries of Inspur Group, China's leading cloud computing and big data service provider, and dozens of other Chinese entities to its export restriction list. These units were listed for contributing to the development of supercomputers for the Chinese military. 5 of the subsidiaries listed are based in China and 1 in Taiwan. Asian stocks tracked Wall Street higher as markets awaited clarity on U.S. reciprocal tariff trade policy. Traders are relieved on reports of an expected staged and flexible approach, though the details are still thin. A bigger than expected drop in U.S. crude inventories, as well as supply concerns, with the U.S. stepping up efforts to limit Venezuelan and Iranian oil exports, has led oil prices up towards a 3-week high. Brent crude this morning up 0.38% and now over $73 per barrel. Well, that's all on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami.